Hey traders, happy Monday. Welcome to the Weekly Outlook. It is December 9th through the 13th, and we have a major, did I say major? Week ahead with a lot of rate decisions and a big UK election that will probably take front and center stage this week. So, thought it was fitting to talk about buckling up and getting ready to trade. We're probably going to have the market using anything and everything in the news as an excuse to move. Now, I would think that most things are going to be centered around the pound crosses this week in the Forex market. But I am definitely trading this week with an open mind and a neutral bias because I'm just looking for movement. I think that's one great thing about big weeks like this is we just expect to see volatility and movement. So let's talk all about it. All right, if you're following out there in social media, here's how you can find me. Instagram at pulver.chris, Twitter at pulverchris, Facebook and YouTube, just type in my name, and that's what I look like. Let's go into the Forex Factory calendar. This is the high impact news for the week. Everything is going to be really a cluster. There's 48 hours of just major intense news right here on Wednesday and Thursday. And you can see that that is the bulk of the week, right? I mean, Monday, we have one high impact event. Tuesday, one high impact event. Wednesday, Thursday, that's the entire week. So we have new loans coming out from China this week, the 11th through the 15th. That's going to start on Wednesday. Going through next week, we have CPI data coming out of the U.S. Also, keep in mind, we're coming off of a very positive non-farm payroll announcement last week where we had jobs reported at 266,000, although there was a monthly miss on average earnings. There was a better than expected unemployment rate. The CAD came in with a massive miss, forecasting 10K, and came in at negative 70. So you got to love the misses of expectations, whether they make 100,000 jobs or they miss 70,000 jobs. Between Australia and Canada, they take the cake for the worst possible forecasts. So back to this week, let's count. We have three. I said three rate decisions by central banks this week. That includes the U.S. You can see here Wednesday at 2 p.m. Eastern Time. There's an FOMC economic projections, FOMC statement, federal funds rate, which is expected to remain unchanged with the lower threshold at 1.5% and the upper threshold at 1.75%. So that again is an unchanged expectation for the Fed this week on Wednesday. We have the press conference with Jerome Powell that follows after. Thursday, we're sprinkling in a Swiss National Bank rate decision, a Euro rate decision, which both, by the way, are expected to remain unchanged. The Swiss National Bank will likely keep things at negative 0.75%. The ECB, even with a new president now and Christine Lagarde, will be looking to stay at 0.0%. There might be a slight change in the deposit rate, but probably not. Looks like the ECB is still on pace to do the same thing with the press conference on Thursday to hopefully spark some good volatility. For years, I have loved trading Mario Draghi and the press conference. The market loves to move on him saying the exact same things that he would say month after month, but maybe Lagarde will be the same way. If the market has a reason to move, maybe Thursday is going to be a good day. But again, all of this could take a back seat to right here. I'm actually looking for it all day. Pound parliamentary elections. Now, Friday we have core retail sales for the U.S. I found this article I thought was interesting coming from Forex Live and just says what you need to know, or here's what you need to know ahead of the UK election this week. So again, the polls are open on Thursday, which is the 12th. So December 11th, 12th, and 13th. Now, we will probably start to see that when the polls are opening, which you see here, polling will begin at 700 GMT and run all the way through 2200 GMT. That is roughly 2 a.m. Eastern time to, I believe, 5 p.m. the same day. So this, for me in the U.S., I'd trade on the Eastern time zone or Eastern Standard Time. If you're in New York or Florida, or I'm in Michigan, we're looking at 2 a.m. on Thursday and going all the way until 5 p.m. Thursday. Now, that is a 15-hour window of decent volatility. And keep in mind here, it says watch for exit polls because it says before we get the confirmed results, expect markets to start moving on what the exit polls are saying. This should typically come right after polling is done. And even if the results may be surprising, you can't really discount them as they affect sentiment. Now, remember, if the polls are closing at 5 p.m. and we have exit polls, it says right here that they will be reported. The results are during hours of low liquidity. So just be aware of that. Meaning, if you're trading around 5 p.m. Eastern Time, 6 p.m. Eastern Time, that is a low volume, low liquidity period. So we might see a lot of 1-minute jumps. We might see a lot of movement that doesn't really have any follow through. There might be a ton of volatility. Spreads might be incredibly high. So I would think, and this is what I'm going to be talking to traders about this week during our live sessions, I would think that during the Asia session, when things start to pick back up volume-wise around 8 p.m. Eastern time, going into the Friday London session around 2 a.m. is the Frankfurt Open, 3 a.m. is the London Open. That would be where I'd expect Friday's follow-through to start opening the floodgates for more volume and volatility. And hopefully we just have a really solid 12-hour period of trading on Thursday and a solid active zone, a 7, 8, 9-hour period on Friday to be trading. And if you're focused on short-term volatility and trading some pound crosses, I hope it's really straightforward. Trade what you see, trade shorter time frames, go after some scalping opportunities, and hopefully the pound doesn't disappoint. One thing, this is just interesting just as kind of an objective outlook. It looks like if, Boris Johnson will stay in power and conservatives remain strongly in the lead or end up winning the election and stay with the majority, then it does look like the pound gains will continue because the Brexit deal or Brexit something is most likely going to get pushed through by January 2020. If there is uncertainty, if there's a hung parliament, then everything that we just saw in October can quickly wither away and be removed. And just as a case in point, they're using an example on the pound dollar. So they're talking about 134, 135 as far as pound strength, but all the way back down to 127, 125, and possibly 120 as a no deal fear. So obviously it's like, hey, price is at 130. It can go down to 125. It can go up to 135. So these are things that I'm ready for. This is why I'm not trying to be heavily positioned ahead of these elections, because this is a big deal. Same thing going into next year with the presidential election in 2020 for the U.S. I don't really want to have much on the yen pairs or dollar pairs heading into that election. So I'm treating this the same way. So I'll be going after short-term volatility, looking for some active trading opportunities on Thursday and Friday as everything is available. All right, so on that note, let's go into the charts and let's start grinding out some analysis for this week. We have the jobs report from Friday that was positive for the U.S. The U.S. dollar index is sitting right here at the neckline. We have this low, this blue line for me represents a neckline. If you can see the pattern, I've talked about this now for the last several weekly outlooks. Left shoulder, head to neckline. This is the right shoulder. Now, if we're going to finally break this in 2019, it needs to break this level. From here, any pullback or just start to look for a sell trade. And I'm prepared for this to break lower, pull back to the neckline, go down. I'm prepared for it to break lower, go a little bit lower, come all the way back up to the right shoulder again, and then go lower, which everything to me still points for weaker dollar. Right? But the big sign for me to start, loading back up in New Zealand dollar, loading back up in Aussie dollar, loading back up in Euro dollar is to see this officially break and know there's room to the downside. I'm still long on Aussie dollar. I'm still long on New Zealand dollar. I'm not long on Euro dollar. And that's it right now. I don't have anything on dollar CAD. I don't have anything on pound dollar. I have nothing on dollar yen. I am long on dollar Swiss, however. That's a different trade, so we'll get to that in a second. But dollar index, are we going to hold the lows based on the stochastic level? Or are we going to cycle in a low and start to push higher for another retracement? Or will this, in fact, break the lows? We will find out more this week with Wednesday's FOMC rate decision and Powell to see what he says. Is it dovish? Is it hawkish? What are they looking to do in 2020? What are the other central banks going to do to follow the Fed? Because that's really been the game, is the Fed has talked about cutting rates, and what are other central banks doing this year? Cutting rates. The Fed talked about raising rates, which they did. What do those central banks do? Raise rates. So if the Fed looks like neutral for this month, but dovish going into 2020 as we head into an election year, then we'll probably see more neutrality and more dovish comments coming out of most central banks. Let's go to that's a quick dashboard look for the U.S. markets this morning. Everything is slightly on the softer side. Last week, if I'm not mistaken, everything finished pretty flat last week. The Dow Jones was flat at 0.1% in the red. S&P was positive at just over 0.1% in the green. NASDAQ was negative by 0.1%. Bitcoin hung around the 7,500 zone, and the 10-year Treasury note was right around 1.79 to 1.8. I think it closed last week around 1.84. We have some earnings this week in stocks, if anybody's paying attention. We have Chewy, which I don't know if we have any pet owners out there that are watching, but I get most of my goodies and toys and treats and food on Chewy.com. They deliver just like Amazon. It's like a 1 or 2 day shipping. It's ridiculous, but ridiculously awesome if you have pets. Let's see here. Tuesday is the 2-day Federal Reserve policy meeting that kicks off. Wednesday is going to be the FOMC rate decision with Powell's press conference. We have some earnings from Dave & Buster's. If you want to play some video games and eat some wings. GameStop Wednesday. I thought this was interesting. Saudi Aramco. Their IPO is already launched, and the stock begins trading in the Saudi Stock Exchange. There's also earnings from Lululemon and American Eagle. On Thursday is the UK vote, parliamentary general election. Earnings also coming from Oracle and Adobe, some notable companies there. And then Friday, the US retail sales. So all my focus this week is going to be short term on the pound. And of course, I want to see where the dollar ends up going based on the dollar index. So other pairs to pay attention to, and I said, let's go to cryptos very quickly. Bitcoin. I've been looking at this for the last now couple of months. I mean, to me, this is still a promising move. Outside of this area, if we can just get a firm break above 7,800. I think if we can break above 7,800, which is just a little bit higher. Let me try to use a straight line here. If we can break and close above 7,800, I think that's a better sign for the bulls to actually establish a bit more of a bottom. Of course, we might see it come back down here to use the backside of the trend line and also use this low. We might have a fresh low in price with a disagreement in momentum, and that could be another reason for a strong bottom. From there, maybe this ends up going higher, taking out this high, and then having a reversal pattern. Because after all, we're looking at a big swing from this low to this high. All of this, to me, is seen as corrective. So if you're into Fibonacci's, this is a swing from low to high. This is a A, B. We're looking for a C to form, going up to a D move. If you're looking for symmetry, this A to B, higher low would be forming and starting pushing this up towards $16,000 and $17,000. But we're gonna have to see some type of obvious bullish pattern emerge here between 6,400 and I'd say 9,500. Otherwise, there's not a lot of excitement happening in cryptos at this time. Let's go alphabetically through our currency pairs. Aussie Cad. Aussie Cad is flirting with this neckline break. I'm watching this one very closely. I am currently long at these equal lows. I'm not doing a very good job of using straight lines today. Right here at these equal lows, I got filled. It's up about 30 to 40 pips. If we break this neckline, I will be happy that I'm staying long. I'm trying to get to 9,200 to 9,250. It will be interesting to see what happens with oil. One thing that is heavily affecting the Canadian dollar is oil. Speaking of oil, let's take a look at it, because if $60 can hold or $59 can hold with firm resistance, which right now we're trading at $58.95, you look left on this chart for the entire year, there's a ton of resistance at $60, $60. There is a regime change in Saudi Arabia with their energy minister that is potentially creating some uncertainty. There was a lot of stability here for the last year, lows at 50, highs at 60, lows at 50, highs at 60. If we hold this high, expect oil to drop. I know that OPEC meetings were last week. OPEC members and nations and also Russia talked about a 500 barrel a day output cut. So we'll see how the supply and demand levels change in the coming weeks, and especially during holiday time, to see if it ends up cementing a high. Maybe we end up creating that high as we go into the end of the year, and just, the range remains. If it just stays in the range, then keep trading it, buy low and sell high. So we are approaching that resistance level between $60 and $61. Okay, Aussie Cad looks good. Aussie Swiss, I'm also remaining long into the upside. We have some indecision coming. Major support, in my opinion, around 6,700 and also around 6,600 or 6,550. I'm willing to hang on to this one a little bit longer, probably up towards 69.50 or higher. Aussie Yen, most likely having some type of pullback. I don't really like the structure on the yen pairs right now, unless the stock market's going to have a big jump in some way, shape, or form. I mean, we took this trade in my trading room on the right side of this trend line, buying it off of an equal low, and it hasn't taken out the high yet. So clearly there's some hesitation to go higher. Our stochastic level almost suggests that on the right side of the trend line, we might end up pulling back down one more time into this area, and then becomes either retesting the lows back in August, or we end up using that as a level to bounce. I'm not sure yet. So this one's more of a question mark, and just going to kind of wait and see on a lot of the yen pairs for now. Let's see here. Aussie New Zealand. This one's probably one of my favorites. I built up a nice little position around 10500. And again, this is from traders that were already short around 108.30. Took a lot of profit on the way down, just moving stop losses to 106, 105. It came all the way down to 104, low 104s, which is pretty outstanding. Now, I am currently long, and I'm looking to build long, and I've been staying long, and we actually have 4 weekly pivots in a row, which is crazy awesome. Also, very high probability trade that we're at least going up towards 104.50 or higher. I, of course, am looking at the bigger picture and the bigger time frame. We should be returning back to 107, if not 107.50. hopefully in the next couple of months. I looked, last year we had a really massive low in January. We had a massive low in March. We had a massive low in August. And, there's probably some seasonality to this currency pair, so it might be the same thing where maybe we establish this low end of the year, and then January, February, March, we end up going back up into this area. If 2020 hits us with another surprise flash crash, then we'll probably fill these lows again and end up going back up to 107 or higher. But I'm still long, and I'm holding long on Aussie New Zealand to go up and make a nice chunk of profit to kick off my year in 2020. Aussie dollar sitting on the right, hopefully a right tip of a crown, which would be this. We have the left tip, center tip. That's not very straight. You see what I'm trying to do there. This is the center tip. This is the right tip. So just off these equal lows, I'm hoping that this is going to be a push to the upside. We've been talking about this in my trading room. Hopefully this is just a nice easy swing from low to high and higher low to higher high. That should put us up above 7,000. If we have a 1, 2, 3, 4, 5 wave move, that puts us up into 7,200, right back where these highs had started. So between 7,000 and 7,200 and a weaker dollar, of course, that's what needs to be confirmed. But once we get it, and I'd say that's a matter of time in the weaker dollar, that we should be pushing this up. I'm holding long intentionally to 7,000, but I'd ideally love to get this thing to 7,200. So holding out, and we'll see where it goes. And I'm going to try to add some positions along the way, and then I'll decide when I'm going to take some profit. CAD Swiss. We had some really nice scalps last week on some CAD crosses. We had the CAD Swiss traders were long with me over near these lows, and it came right back up to where we broke out on the BOC on Wednesday. Beautiful pullback right there, in fact. So nice little chunk for about 80 to 90 pips on the CAD Swiss. Currently on the higher time frame, this one's just a wait and see. I'm just gonna continue to buy this one as low as I possibly can. I will buy it. Right now I'll probably hold off because this is going really, really, really slow. I could see this working its way down lower, and it'd be at this level around 7,300 that I'm gonna start looking to buy it. 7,200 I'll buy it, 7,100 I'll buy it. Levels like this I'm looking to buy low and then trade it up to range resistance around 76. So that's if we get a decent nudge to the downside and the CAD will weaken enough to drive that pair lower. I just want to buy it extremely low. CAD Yen, also on the right side of the trend line, getting quite tricky. I'm fine just staying out of this one. Yen pairs are a little difficult right now. Swiss Yen, same thing, still in a big range. So we have some major resistance around 110 and support around 109. And if it breaks above, breaks low, trade accordingly. Or in my book, I'm just crossing off the list and not really focused on the Swiss Yen. Euro Aussie, paying pretty close attention to this pair. I'm still looking to short. 62.50 we shorted, 63.50 we also have some levels to short. It's around 63.95 are our equal levels here. If it somehow comes up and finds this resistance becomes equal highs and resistance once again, we could have some range-bound trading going back down to 6,000. The reason I'm still focused on this pair is if we can break this neckline, left shoulder, head to neckline. This is just more of a complicated right shoulder, but if we can break this neckline, this should be producing a trend. Maybe this happens to coincide with a weaker dollar and a stronger Aussie, and Aussie dollar rallies and Euro Aussie drops lower, and the Aussie remains firm and strong across the board. But I'm going to continue to look for opportunities to short this one. If we get down to 6,000, I'll probably take some profit from my sell trades in here around 62.50. Of course, I can always look to get back in and try to trend trade this down towards 56 and 5,500 on the break of that neckline. Euro CAD, another one. This was actually a nice scalp as well last week. Similar to the CAD Swiss, just in the opposite direction. Take a look at this one. It went straight up. I know some traders were short. It went straight down. I bought it, and it went straight up again. So I ended up taking about 70 pips of profit there after also closing. I think I was long in this one twice. That's what it was. Let me go back a little bit further here. Here we go, right here. So I was long because of this little inefficiency. I was long over here, took some profit, and then it went down again. I bought it again, took some profit on Friday. So this was a nice little scalp for about 90 pips and another scalp for about 70 pips just in the last week on the Euro CAD. I will definitely take that trade. Euro Swiss, come on. We're 30 pips lower than we were this morning when I was taking a look at price. On the daily chart, we're still sticking to this structure, support. Maybe the combination of the SNB and the ECB on Thursday will give us a bounce to the upside. If we end up coming down one more time out of this range, 108 to 107, to me would be the massive support level that I'd be really, really looking for a bottom to form and to buy. If we bounce and hold support, you can see it pretty nicely here. Support, 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 support. So if we hold that level, indecision, start going up, look at 11100, 11150, and I am holding on to a lot of trades from back here, and I'm hoping I can take some profit there. And that would be nice. Euro pound, staying out of the euro pound, staying out of the pound pairs for now. We did break this 8,500 level, which was massive support. We went a little bit lower, of course, but anything can happen. We could end up bouncing off of this level. We could come all the way back up here structurally and end up coming back to these inefficiencies in October. Short-term trading is all I'm focused on this week on pound crosses. Be careful. Trade smaller. Okay, because look, if it's wild and crazy and unpredictable and it's low liquid and things that are out of our control, don't be ruined by this. I mean, if this is something that can generate an extra 100 to 500 pips for you this week or an extra 1,000 plus pips for you, that's great. That's fantastic. Maybe it's a really easy election to trade. But if it's tricky, I wouldn't say that this is going to be a make or break. Don't plan on making all of your money on this currency, on just the baskets. The pound basket could be really tricky, and I'd rather be safe than sorry and have it be something where, if I win, great. It's a nice little padding to my month and, take advantage of the opportunity that's right in front of our face. But if we lose, we want to make sure we contain it and control the downside risk. But technically speaking, it's, this is the big bounce level between 8,500 could be holding. The next level support is right down here around 83. If the pound continues to get stronger, then it could be this. It could just pull back briefly and start going lower. And this would be trading everything short term that's bearish on the euro pound and bullish on the other pound crosses. So time will tell, and we'll probably start seeing most of the volume and volatility pick up on Thursday and Friday. Euro yen, as in euro yen. Right here on trendline support, if we can hold this level or maybe even pull back to an equal low around 119, maybe we pull back to this equal low around 119, get a bounce there. Yen structure can be a little bit tricky at this time. Euro New Zealand has been a really, really nice trend to the downside. I'm fine with it. Stay with it. I've had a lot of traders that were short with me at 7,400, 7,500, and they did a much better job of holding than I did. I essentially broke this level and took some profit early around 72. That was my first level. 7,200 was target 1, 7,000 was target 2. I have traders that also have been hanging on to this ever since, and they're now trading at 69 and 68. So traders have hung on to this a lot better than I did and just kept moving stops, moving stops, moving stops, and made a ton of profit, which is excellent. So we could be coming into some lows that we start to see the Euro New Zealand bounce back up. We might also just see a stronger trend and more continuation on the Kiwi strength, which has been a pretty forceful move. New Zealand CAD's been bullish, and New Zealand Swiss has been bullish, and New Zealand dollar, New Zealand yen, New Zealand dollar in general has been very, very strong. Aussie New Zealand has dropped from the highs at 108.50 all the way down to 104. So the Kiwi has been very, very strong. Let's see here. Euro dollar. Wanting to see some more clarity, we are sideways between 110 and 111 at this time. Currently trading at 110.62 at the time of this video. We'll just see if it goes sideways. The big breakdown in the dollar will thrust the euro dollar up above 112. Otherwise, it's range bound, and I'll end up buying it low and just playing the range. Just play the range, play the structure. If it breaks higher, this is going to be the squeeze in the run against the dollar. And I do think there's room. I think there's room for the euro dollar to go to 112 to 116. That's 400 pips. You can be very aggressive on adding positions. It's going to go fast. It might be irrational and have a lot of bull flags, but it's not confirmed yet. So trade the range and trade the structure right now. Pound pairs. I'm just going to gloss through them. Pound pairs, a little bit stronger, a little bit firmer, and it's a 50-50. It really is. Going into the election on Thursday, it could be up, it could be down. It could be both. Obviously, it can go up and down or down and up. So whatever happens, don't be too biased. If you're looking at any type of structure, maybe it's best to follow like the 1 hour chart for your direction and then trade on smaller time frames. The 1 hour chart would be your primary direction. Look for a 30 or 15 or 5 or 2 or 1. Look for some smaller time frames to enter if you're scalping during certain sessions. If you're going to trade the active zone or the London session, look at a 5-minute candle, something like that. But stay with a shorter term direction just to make sure that if there's all sorts of crazy volatility, that we're not getting stuck in the wrong direction. So again, I mean, it could be really, really tricky. It could also be silky smooth up. It could be silky smooth down. Hope for the best, right? Plan for the worst, hope for the best. That's trading. All right, that's pound. Pound CAD. Pound CAD. If we break a trend line, this is set up for a beautiful rising wedge. Could it come all the way back up to these range highs? Sure, it might come all the way back up here towards 7,600, and maybe that's the high. Maybe there's indecision, then it drops. Okay, so it can certainly go up and then down. It can go down, then up. Trade it short term and try to stay with it, if at all interested. Pound Swiss broke a little bit higher. Pound yen broke a little bit higher. This is just that drifting pound strength we've seen over the last couple of weeks. Pound New Zealand was not quite a follow-through breakout. We ended up going from 205 all the way down to 198. That's 700 pips of movement, but now we're pulling back to the start of this breakout point. So again, could it go up and retest 204 and 205? Yep, it could go right up here to retest the high, or it could drop all the way back down here into these lows from October. We'll find out. Pound dollar, that was the article that I was reviewing. Looking at the exchange at 130, it's currently at 131.50. It would not be surprised to see this drift up towards 133 and change, which is the previous highs from March of this year before the April and May trend really kicked this into overdrive. So again, could we go up to these levels first and then drop? Yes. Could we drop back down and then rally? Yes. Could we go all the way back down here and just remove all these gains from October? Yes, yes, and yes. Right? So I'm not saying this to be like, well, he's saying that anything can happen. Of course, anything can happen. And it probably will happen, and it will happen in higher movement, higher volume, higher volatility type behavior. All right, so we mentioned the Kiwi and all the strength. Here's a New Zealand CAD. Hopefully we have a little bit of a pullback. I'm looking for an opportunity to stay long in this one. So a little pullback goes a long way, and we'll see this one hopefully continue to go higher. This is also a nice breakout. So we have left shoulder, head to neckline. This neckline has broken. We had a nice push in December. Let's go Kiwi. Let's go to the outer channel around 8,900, 9,000. Then we can sell this bad boy to the downside. So hopefully we have one more push coming around, 8,600, 8,550 area, and we hold and just keep going towards previous support, becoming resistance around 89 and 9,000. Then we start looking to short. But this should have some legs to continue to the upside. New Zealand Swiss. Nice run to the upside. Everyone that's been following along for the last couple of months, I've been joking about this yellow box, but we finally broke it, and we finally got long. We finally had all the reason to hang on to these buy trades. We were holding long. I had some traders taking some decent profit on the way up and continuing to take some profit. If it pulls back, look for there to be a dip around 6,400. We have a monthly pivot around 6,377 that could also offer some really nice support. So look for the bounce. Try to go up to the outer channel around 6,600. New Zealand JPY broke out, just a simple breakout there in November, December. New Zealand dollar, probably one of the best looking trades. Again, after waiting. We had this big break on the upside in December. And that bullish breakout, if it's going to balance, then let's get a pullback towards 6,450 or 6,400. And then let's continue with another leg higher. So just come back in and balance a little bit. Dollar weakness, hopefully be a nice bottoming point right there at that previous neckline, which was resistance. Resistance now becoming support. What a better spot to buy it than right there. So I'm still looking to stay long on New Zealand dollar with some scaling levels to buy back in. Dollar CAD, I know I had some traders that were trading it really, really well. We had a lot of good profits last week on the Euro CAD and the CAD Swiss, and this was another one. If you bought it, you had this nice BOC move on Wednesday, and if you bought it, you were paid on Friday. So this was a nice push, nice opportunity to buy it around 31.80, 31.70. We ran all the way back up about 90 pips to that little inefficiency from Wednesday to Friday. So just some good price action for the week. Wednesday created this, Friday created that. That's it. Close it up, be done. Nice little scalp. So the CAD was paying out nicely last week. Dollar Swiss. Dollar Swiss had a pretty fierce move to kick off the week last week in December's first week of trading. I am currently long on the Dollar Swiss. Now, I know that I might be in this. We'll see what happens. If it breaks and goes lower, then I'm going to stay in this trade and just take some positive rollover from it and keep adding in at lower levels. If I am right on this little inefficiency, then I will buy it low. This will be range bound all the way back up towards 1.00. And I would love to see a weaker Swiss. I'd love to see the Aussie Swiss go higher, New Zealand Swiss go higher, Euro Swiss go higher, Dollar Swiss, of course, go higher. So I'm still aiming at a near-term, medium-term, weaker Swiss franc. So that's part of the reason I decided, you know what, this is a good enough trade for me to get in low. And if it cooperates and goes up, then I'll grab probably 100 pips or so. If it goes down, then I'll just buy in later, collect some some rollover trades and some positive swap, and then make it a big trade later on. But we'll see what it plays out with this week on Thursday with the Swiss National Bank rate decision. Dollar yen, bit of a mess. Don't feel bad about leaving this one alone. I certainly don't. Yen pairs are trashy for right now. Peso and krone. dollar MXN, probably not in the spot that I want to do anything with it. So I'll take a siesta right alongside this currency pair. I will buy it low around 18.7. I will sell it high around 20.7. Right now I'm going to leave it alone. Dollar krone and euro krone. We're talking about this one as a possible 2020 trade. It would be fantastic for this currency pair to have one more push to the upside. Because that would be, this is a fifth wave move. We're coming all the way up to hopefully channel resistance. And then we start off 2020. What better way to start it than creating a high and starting to drop back down to channel support, or where we had previous resistance to become future support. So we could have a big trade lining up on the Norwegian krone in 2020, but nothing that I want to trade right now unless you're interested in trend trading, because the path of least resistance on a lot of currency pairs stay with the trend. So this has been a trending move. It's been a fifth wave breakout to the upside. If you're looking for tight stops, well, there it is. Tight stop, tight stop. If we go up to these highs, if we break these highs, then you're in with very low risk and you're going after higher reward. So I think that's probably the direction for right now on the dollar krone. Euro krone looks pretty similar to that unless we can break this trend line, which hasn't happened yet. So this would be an inner trend line to outer trend line. But like I think it's going to be most likely tied to oil prices or tied to some bigger move towards the end of the year and beginning of next year. And that's going to do it. We went through the dollar index, went through oil, went through cryptos, talked about some earnings, talked about everything in the news this week. There's a lot happening. All right, so be aware. Don't be caught off guard. Trade a little bit smaller. Be a little more conservative. Be a spectator on these pound pairs on Wednesday. We do have some opportunities for traders to join Wednesday, Thursday, Friday. I'm running live sessions from 1 p.m. Eastern Time to 3 p.m. Eastern Time. We will sprinkle in FOMC news on Wednesday. We will recap on Thursday's movement. I'm having my trading room at normal times on Wednesday and Thursday and Tuesday. But it's going to be a fun week. I'm really looking forward to it. There's no reason to pack up and say, okay, I'm done trading for the year when there's so much market movement ahead. And a lot of this is geared around the news. So this is a good opportunity to focus and buckle down and get ready to trade and grab some extra pips. If you want to be more conservative, then you can still grab some pips, but just trade a little bit smaller. But I think it's going to be a fun week. So I look forward to trading with all of you in my trading room and trade with you in the UK elections this week. Be sure to take a moment, leave a like, leave a comment. Let me know how I can help you. And happy trading, everybody. See you soon.